Should you invest in a Roth IRA or a traditional IRA? Is one better than the other? Let's jump in. Welcome back to the channel. I'm Edwin, also go by IDV, and in today's video I'm going to be explaining the similarities and differences between Roth and traditional IRA, so that by the end you'll be able to determine which one is best for you. Also stay tuned because I'll be sharing which one I personally invest in. But before we jump into that, we need to explain what an IRA is. The IRA stands for Individual Retirement Account, and it's something that you set up yourself on any brokerage of your choosing, hence the individual part. And you may be asking, if you already have a 401k with an employer or some other type of employer retirement account, are you able to have an IRA in addition? And the answer is yes. However, with Roth IRA, there's some limitations, but I'll explain that later in the video. Now, moving on to the similarities. Both of them have a annual max contribution limit, which at the time of recording is $6,000 and $7,000 if you're above the age of 50. Now, in order to make any contributions, you need to have earned income. And just to name a few, these are things like wages, salary, tips. And it doesn't include things like interest or dividends. Now, also, you can continue adding contributions up into April 15th of the following year. Now, where these two differ mainly is with how they are taxed, who is eligible to contribute, and how you withdraw the money. Now, as far as taxes go, with a traditional IRA, you can contribute with tax-free, and depending on your income level, you can get a tax deduction for that year. Then when you take money out, you have to pay taxes then. Now, Roth IRA, on the other hand, is you can contribute post-tax. It will grow tax-free, and when you take money out, you don't pay any taxes, so that'll be tax-free as well. Now, you might think that there's some catch to be able to take stuff out tax-free, and there is. It all depends on what your modified annual gross income is. And to help you out, I put two links down in the description. One to calculate your annual gross income, and a second to calculate your modified annual gross income. In most cases, both of these are generally the same. Now, if you're filing single in 2021, if your income is below $125,000, then you can contribute the full $6,000 to a Roth IRA. Now, between $125,000 and $140,000, you will have your max contribution will be reduced. And above $140,000, you can't contribute anything to a Roth IRA. Now, in 2022, the IRS raised that, so if you're filing single, you can contribute the full amount up into $129,000, and between $129,000 and $144,000, you will have a reduced contribution max, and above $144,000, you won't be able to contribute. Now, in 2021, if you're married, you can contribute the full $6,000 if you're underneath $198,000. Now, between $198,000 and $208,000, you will have a reduced max contribution, and above $208,000, you won't be able to contribute anything. Now, in 2022, they raised that, so contribute the full $6,000 if you're below $204,000. Between $204,000 and $214,000, you'll have a reduced max contribution, and above $214,000, you won't be able to contribute anything. Focusing back on traditional IRA, there are no income limits, so you can contribute the full $6,000 no matter how much your pay is. So let's talk about how you can withdraw from each of the accounts. For both of them, starting at the age of 50 and a half, you can withdraw penalty-free. For the traditional IRA, if you withdraw before 50 and a half, you would penalize at 10%. Also, you are forced to withdraw from the account starting at the age of 72. Now, for the Roth IRA, you are not penalized if you withdraw any of your contributions. You are only penalized if you withdraw any of your earnings, and you're penalized at the same 10%. For example, if you contributed $50,000 and your money grew to $60,000, if you withdraw any of the $50,000, there's no penalty. But once you start touching some of that extra 10K of your earnings, you will be penalized at that 10%. And for the Roth IRA, there's no limit when the IRS starts forcing you to withdraw. Now, going back to the original question, which IRA is better for you? And it really depends on your situation. The Roth IRA may be more appealing to you if you are underneath those income limits and are looking for something to grow tax-free and then you withdraw tax-free. Now, if you exceed those income limits, then the traditional IRA is really your only choice. Also, some people may be more drawn to a traditional IRA if they're looking for some type of tax deductions for that year. Now, there is something also called a backdoor Roth IRA that I didn't mention, but basically, in summary, it's when you contribute to a traditional IRA and then later convert it to a Roth IRA. I did put a link down in the description going more in detail on that. One other question you may have is there a way to have both the Roth IRA and traditional IRA? And there is. You can open up both of them and contribute to both of them. You just can't exceed $6,000. So for example, you can have a Roth IRA and contribute $3,000 and then open a traditional IRA and contribute $3,000. Let me know down in the comments which IRA are you contributing to. Personally, I have a Roth IRA, and in my next video, I'll be showing my entire portfolio. So definitely hit that subscribe button and turn on notifications so you'll know when I release that. Well, I'll see you in my next video.